Singapore regulators work together with traditional banks to develop uniform standards for screening potential customers from the crypto industry. The collaboration has been ongoing for the last 6 months. According to a Bloomberg report from April 6, the Monetary Authority of Singapore, MAS, has been working alongside the police forces to help local banks optimize their procedures for opening accounts of digital asset service providers. After half a year of cooperation, its results and conclusions for risk management and due diligence would be published in the next 2 months. The potential guidelines will also cover the topics of stablecoins, non-fungible tokens, NFTs, and transferable gaming or streaming credits. At the same time, the banks will reserve the right to make decisions based not only on guidelines but also on their own risk assessment. Germany has often been regarded as one of the most crypto-friendly nations in Europe. It has reinforced that notion with its latest regulatory approval to digitize stocks as crypto shares. This week, the German Ministry of Finance announced the Future Financing Act. The new legislation will pave the way for a regulatory basis to issue crypto shares. Furthermore, the act aims to bring together regulations from corporation laws, capital markets, and tax laws. Minister of Finance Christian Lindner said, "We want Germany to be the leading location for startups and growth companies." He added, "This is why we are improving access to the capital market and facilitating the raising of equity. Small and medium-sized companies will also benefit from this." The Australian Securities and Investments Commission has cancelled the financial services licence held by Binance Australia Derivatives in response to a request from Binance yesterday. The license granted Binance's Austers Trading Thai Limited to issue and operate a market in derivative and foreign exchange contracts. Following the cancellation, clients would not be able to expand or open new positions from April 14, 2023. Binance requires customers to close derivative positions before April 21, 2023. Any positions that remain by that date will be closed by Binance. The ASIC had previously probed Binance's criteria for separating client types. This is a developing story. American rapper Soulja Boy launched limited edition Soulja Boy 3D NFTs, non-fungible tokens, days after the SEC charged him with illegal crypto promotions. However, that didn't stop the rapper's new NFT collection from selling out in a matter of hours. Shilling NFTs amid SEC charges. The limited edition Soulja Boy 3D NFTs are comprised of 500 items on the Ethereum blockchain. It promises exclusive unlocks on the upcoming Soulja Boy 3D meta video game and member-only advantages. As per OpenSea, the collection has a total volume of 68 ETH, which comes close to $128,000 at the time. The NFTs command a floor price of 0.1029 ETH on the platform. At press time, the limited edition Soulja Boy 3D NFTs have 246 owners with 683 sales, of which 49% are unique owners.
The Ripple XRP community is reportedly stepping up efforts to have the cryptocurrency listed again on trading platforms after Coinbase pulled it off. This was allegedly due to the continuing legal conflict between Ripple Labs and the U.S. Securities and Exchange Commission, as reported by familiar sources. Despite more than 2 years of legal wrangling, XRP has yet to be recognized as a security, with community members pushing the hashtag #RealistXRP on Twitter to drum up support for its reinstatement. The community's latest push has received a boost from Paul Grewal, Coinbase's chief legal officer, who has backed claims by attorney John Deaton that XRP is not a security. Grewal supported Deaton's assertions on Twitter by asserting that investment contracts must adhere to strict requirements that Congress and the Supreme Court have interpreted. Grewal asserts that secondary transactions of digital assets, including XRP, do not include investment or, in a progressive move towards crypto adoption, Japan's ruling Liberal Democratic Party's Web3 project team has published a white paper detailing recommendations to expand the nation's industry. Under Prime Minister Fumio Kishida's administration, the white paper aims to create a more welcoming environment for cryptocurrency businesses, while other governments focus on implementing regulations to protect consumers. Akihisa Shiozaki, Secretary General of the party's Web3 project team, emphasized that the crypto industry will shift to mass adoption. He also highlighted the entry of major Japanese players into the market, such as NTT Docomo's commitment towards investing some 600 billion yen, $4 billion, in Web3 infrastructure. Soluna has reached a 25 megawatts hosting contract with a Bitcoin miner at its project Sophie in Kentucky. The contract will shift business model at Soluna's modular data centers at Project Sophie from proprietary mining to hosting Bitcoin miners for the customer. In addition, Soluna is preparing the site to begin phasing in the customer's hardware over the next several weeks, with plans to sell existing machine at the site and redeploy capital.
Singapore regulators work together with traditional banks to develop uniform standards for screening potential customers from the crypto industry. The collaboration has been ongoing for the last 6 months. According to a Bloomberg report from April 6, the Monetary Authority of Singapore, MAS, has been working alongside the police forces to help local banks optimize their procedures for opening accounts of digital asset service providers. After half a year of cooperation, its results and conclusions for risk management and due diligence would be published in the next 2 months. The potential guidelines will also cover the topics of stablecoins, non-fungible tokens, NFTs, and transferable gaming or streaming credits. At the same time, the banks will reserve the right to make decisions based not only on guidelines but also on their own risk assessment.